It is Monday, May 11th. This is The Breakdown. I'm your host, David Canellis. We've got a few quick stories for you this morning to get you ready for the working week ahead in crypto. We are talking about this morning, our NFTs back. Bored Apes are up. They've doubled in the past month. And so have some other, what we used to call blue chip NFTs. Is the market back? We're going to find out. We're also looking at Canton, the institutional focused blockchain, has raised a bunch of money. It is the institutional super cycle happening right now, and Canton is the focus point. We're going to be taking a look at that. We're also going to be looking at strategy and the cringe that is coming out of Saylor's Twitter account as he looks to cool heads over the potential for strategy to actually sell Bitcoin instead of hold it forever. But without further ado, this is The Breakdown. Let's get to it. This episode is brought to you by Nexo. Step into a new era of digital wealth. Earn interest on your digital assets, borrow against them without selling, and trade all in one platform. Get started at nexo.com/breakdown. All right, first, let's take a look at the NFT market because there was, I think it was a story in CoinDesk or something like that that was chatting with Yuga Labs about how they view the NFT market, and basically they were making the case that everything was oversold and that the real material interest below the surface has been percolating ever since, which okay, perhaps that, and I overuse the term, perhaps that is an over optimistic read of the situation with NFTs, but let's still have a look. I mean, so Bored Apes was the one. I've got this on screen, nftfloorprice.com, and yeah, we can see that over the past month or so, yeah, the floor price has about doubled at times. So this time last month, the floor price for Bored Apes was about 14.3K, and earlier this month it hit a top of about 26K. So yeah, around about doubling. Which isn't too shabby. And it's not just Bored Apes too. I mean, we can have a look at CryptoPunks. CryptoPunks has gone about the same kind of growth. We were looking at about 60K USD. Oh, no, so nowhere near the same amount of growth. We were at 60K USD this time last month. Now we're up to about a top of nearly 75K earlier this month and holding somewhat steady. So not quite doubling for the CryptoPunks, but still seeing some degree of growth. And then if we check out Pudgy Penguins, these are the top 3 NFT collections. Let's see what the deal is here. We're looking at, about this time last month, about 9.3K, and we've pumped up to about nearly 14K at the start of the month and kind of holding around 13K right now. So Bored Ape seems to be the one that is seeing the most growth, but in general, the trajectory across the top 3 NFT collections is trending up and to the right. So does any of this mean that the NFT market is coming back? I mean, we can have a quick look. I mean, I've pulled up Hildobby's dashboards. Hildobby is probably the go-to when it comes to NFT dashboards, at least on June. And so if we're looking at NFT volume, and this is all the EVM chains, and this is represented in USD, so not in ETH or anything like that. I mean, it is tough to say that the NFT market is coming back, but at least it is not trending downwards. We can see that basically the last time that it seemed like NFTs were back was around September last year, and I believe this was due to buzz around potential OpenSea token and an OpenSea airdrop, so it inspired a little bit more usage around that time. And then we dropped off significantly again as kind of everyone realized that maybe we have to wait a little bit longer for an OpenSea token. But we have seen a small uptick over the past month or two in terms of trading volume, but nothing exactly to write home about. Let's see if there's anything else interesting that we can spot from this. I mean, in terms of NFT volume, where the market share is, it is still mostly OpenSea and a little bit of Blur. We're at about, the most latest reading was about 70% of all NFT volume is on OpenSea. So perhaps still a little bit of activity there trying to farm for a potential airdrop, not too sure. And an overwhelming majority of NFT volume on in terms of EVM chains is happening on Ethereum, which I suppose is to be expected. And NFT trading addresses in general, I mean, this came up when we were talking about the Mega ETH airdrop and airdrop farming, how big the I don't want to say addressable market, but how big the interested market is or active market is in terms of these actual in terms of trading NFTs. We're looking at about every week there's something around 15 or 20,000 addresses trading NFTs. Yeah, tough to say that that NFTs are back. Um, One thing that has always fascinated me, and I know that what I'm showing you on screen is only EVM chains, and it doesn't show what's happening on Solana. And you know, maybe we can do another segment in the future on just the NFT market on Solana. But something that has always fascinated me is just how, I mean, I don't want to say it's small, like how outsized the influence on the zeitgeist, on the market, actually the NFT space really is. If we're looking at Bored Apes, right now there is 5,600 unique addresses holding NFTs. So and this is, I mean, it's a function of the Bored Ape Yacht Club. It's meant to be an exclusive community that you gain entry to by holding a Bored Ape. So of course it's going to be somewhat small. Um, but and just an aside here, we have a nice chart here that shows the sales of Bored Ape Yacht Clubs over the past 3 months, and we can see a big uptick somewhere around the start of April. We saw a big jump up. So, and by big, I mean we were seeing five and a half sales per day on either Blur or OpenSea for Bored Apes, and now we've jumped up to around 10. So we've doubled the amount of of trades per day over the past month or two. So that gives you a little bit of context. But the holders, I mean, at its peak in early 2022, the number of Bored Apes holders was only 6,400, and that's addresses. So, and now we're down to around 5,500, 5,600. And if we look closer at the holders of Bored Apes, we can see that the top 5 or 6 holders hold 100, over 100 Bored Apes. And then if we go down to the top 25, they're holding 20 Bored Apes. So it's a highly concentrated market. Step into a new era of digital wealth with Nexo, the premier digital assets wealth platform. Earn interest on your digital assets, borrow against them without selling, trade a wide range of cryptocurrencies, all in one place. Nexo is now available again in the US with an evolved product suite tailored to today's market. For a limited time, new US clients can unlock 30 days of exclusive Wealth Club Premier benefits, including enhanced interest rates, reduced borrowing costs, and up to 0.5% crypto cashback on trades. Get started today at nexo.com/breakdown. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. The kindest description that you can give of these people is that they're tastemakers. We're now entering a new period of the crypto market that, okay, a lot of the retail speculation has gone away, bear market, retail bear market, institutional bull market, but there is still this small enclave of influential holders of these blue chip NFTs that can change the sentiment of the entire crypto space on a dime. Because all it took was a small rise. I mean, we could debate whether the Bored Apes floor price doubling in value is a small rise. I would say that it would be small to small medium size considering how illiquid this market is. So it just takes a few buys and all of a sudden the floor price starts chugging upwards and so we get this rollover effect. But if it was the case that there were all of a sudden another 1,000 more interested buyers in Bored Apes, I can imagine that would really significantly pump up the price of not just Bored Apes, but the other blue chip NFTs as well. There would be a flow-on effect. And it is just taste. It is just, a belief that we might be turning a corner in the bear market into something a little bit more, a little bit more conducive to more speculative action in markets. And NFTs, they have been elevated somewhat. I mean, since the 2021-2022 crazy mass adoption era of NFTs, there has been slow percolation of digital art movements, NFTs showing up in museums and other sorts of in the art world. It's obviously not as big as it was in 2021, 2022, but it would not surprise me if we started to see more quote unquote cool people start to come back around on NFTs, and at least maybe cool only in the crypto context and not in the greater population. But perhaps we could be looking at the start of some kind of resurgence in interest in digital art as a speculative asset, rather than just the butt of the joke. At least, hey, that's how I'm feeling. At least, NFTs. Obviously, there was so much nonsense when it comes to NFTs, but in terms of the crypto DNA, and I see that term bandied about a lot, probably by slop posters trying to talk about the difference between Web3 and crypto and Wall Street and suit coins and stuff like that. But I still hold a very soft spot for NFTs, and I really don't believe we have seen the last of them. So, I mean, we might not be looking right now at an immediate bull market for NFTs, but when I see that how small the market continues to be, then by warrant of logic, it only takes a relatively small group of interested parties to come back around to NFTs that we would see some kind of significant price action on these things. And I can only imagine that the crypto space needs that kind of relief. That there could be some interest, not from people in suits, but from people who are interested in digital art, digital culture, crypto culture. That's a really ugly term these days. Nobody wants to think that crypto is a culture, but I'm not ready to give up on that dream just yet. But in any case, it's something to keep watching. So, on to the next story. Okay, so we have this Bloomberg report about Digital Asset, the firm behind the Canton blockchain, raising at a $2 billion valuation. So not too shabby at all. Digital Asset Holdings is raising money from investors, including A16Z Crypto. This is according to sources with knowledge of the matter, according to Bloomberg. They say financing is expected to close in the coming weeks, and the final amount raised could change. And they're raising around $300 million in the round. The last time they raised money, it was $50 million from backers, including Bank of New York Mellon Corp and NASDAQ late last year. Earlier in 2025, it announced raising $135 million from firms including Liberty City Ventures, QCP Group, and BNP Paribas. So, yeah, big money flowing into Canton. So I suppose they have very big plans about how to expand and use that money. Let's see. Several of the firm's investors, including TradeWeb Markets, have been using Canton, are involved with its governing entity, the Global Synchronizer Foundation. A Copper research report published in October said the network had experienced parabolic growth. Yeah, A16Z did just raise $2.2 billion. So it seems like some of that money is flowing into Canton, but TBD on that whether the new Fund 5 is actually involved in it. Yeah, they note here that Canton Coin has diverged from the wider crypto market over the past 6 months, according to Kaiko. Its resilient trajectory makes it a clear outlier in an otherwise stressed environment. We're going to have a look if that really is the case with up-to-the-minute data. And okay, that about covers it for the Bloomberg report. So, I mean, okay, so TradFi is still super bullish on Canton, and Canton has copped a lot of flack since DAS NYC when in the wake of that, considering Don Wilson from DRW that backs Digital Asset was basically making the case on stage at DAS NYC that that chains with MEV are possible are just unsuitable for financial markets. And then there was this whole thing about Canton trying to make the case that it was indeed a permissionless blockchain when there are at least parts of the serious architecture that handles transaction that are permissioned, namely that they have super validators that are basically whitelisted validators. But I digress. So let's just have a look at the health of Canton Coin in general in context of all of this. So right now, Canton is sitting in about 21st place in terms of market cap. So in between Toncoin and Stellar. So a serious asset when it comes to its placement in the crypto market by market cap at least. When did the coin launch? The coin only launched in November. And we are seeing a little bit of growth. I mean, there was a decent dip just after it launched, which is to be expected. It looks like it listed at about 12 cents and immediately dropped 50% in a month. But since then, it's climbed back up. It hit a top of close to 20 cents in February, and we've kind of tapered off since then, and now we're sitting at around 16 cents. So it has been obviously resilient, but I would say that this is just a function of price discovery, considering it is a brand new coin, effectively. So what are we at? We're up maybe 30% or so since its list price. So that, I mean, that's the coin itself. If we want to look at the growth in terms of what's happening on Canton, I think the Thai probably has the most detailed dashboard right now about the Canton network. And if we, I mean, it doesn't tell us how much notional volume, how much dollar volume is flowing through the chain. All we have is daily active users and daily transactions, and yeah, validator rewards that are coming to them. But I can't tell if this is in dollars or in just the token itself. But in any case, we can see that yeah, the active users has exploded, and I worry here that the Thai is conflating daily active users with uh, daily active addresses, which if you want some more context on that, please go back to one of the very first episodes of the breakdown earlier this year, where we broke down the concept of the most used chain and how that is basically a fallacy when it comes to on-chain analytics.
Let's take a moment to talk about Nexo. Nexo delivers a premier digital assets wealth platform designed to help clients build, manage, and preserve their wealth, earn interest on your digital assets, access crypto-backed credit without selling your holdings, trade with advanced tools, all supported by 24/7 client care. Now back in the US, Nexo offers new clients 30 days of exclusive Wealth Club Premier access. That means enhanced interest rates, reduced borrowing costs, and up to 0.5% crypto cashback on trades. Benefits typically reserved for Wealth Club members and private clients. Nexo is also expanding its global presence, becoming the official crypto partner of Tennis Australia, the organisation behind the Australian Open, and the digital asset partner of the Audi Revolut Formula One team. If you're ready to approach digital assets with a more structured wealth strategy, visit nexo.com/breakdown to get started. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research.
But in any case, we are looking at least, okay, so there was a big spike in active addresses at the end of last month, but we've dropped back down. So basically, at the start of the year, let's have a look. At the start of the basically at the start of October, there was about 5,000 active addresses on the network on any given day. Now we're up to about 57,000. So the active addresses has at least on 10x. But that said, 57,000 addresses, it is a decent, healthy number, but it's not like it's exponentially more than Bitcoin, Ethereum, or Solana, or anything like that right now. Daily transactions followed the same trajectory as the daily active addresses. And we're looking at about 1 million or so worth of transactions flowing through Canton per day right now. But, you know, we can't tell what those transactions are, at least from this particular dashboard, and so I won't make any judgment calls about the quality of those active addresses or the daily transactions right now. But there is something to be said for that. So far, the cumulative unique addresses over the entire lifespan of Canton, which has been online for, I want to say, about a year, we're up to about 600,000 cumulative active unique addresses. So there's something to be said for that. Definitely people are using this chain, but we'll chalk this up to another case of it being an institutional bull market. But it remains to be seen how this benefits the rest of the crypto space. I like the idea of segmentation across the crypto space. I would like for, if in the next 5 or 10 years, we could get away from treating crypto as this ecosystem that is separate from the rest of finance, because crypto is a technology, blockchain is a technology. And I know this goes against what I just said about crypto being a culture, or potentially the idea of crypto being a culture. Because when we think about the stock market, does the stock market have a culture? Can we just say that the stock market is bad? Perhaps if you're a socialist or something like that, or you're a tanky, you could make the case that the stock market is bad. But there is just the stock market is diverse. Crypto is becoming more diverse, and Canton having a larger role, but Canton having a larger position within the crypto space only makes it more diversified, and it only goes to show that crypto itself is a technology. And that's about all it is. So, over time, perhaps even we'll stop talking about crypto and as a term, and we can just talk about, DeFi or something like that, instead of this label of crypto and the crypto space. So when I see that the biggest raises, or some of the biggest raises, are at least going towards the more institutional focused projects, it allows me to say, or it allows me to think in my own mind, like, okay, that part of the market is seeing a lot of attention. And maybe this is a flow-on effect. We're going to get to Saylor in a minute, but maybe I would argue that this is a flow-on effect from the financification of Bitcoin through Michael Saylor and other digital asset treasury companies. So when I see that, a butterfly flaps its wings at strategy, and then all of a sudden we have Canton raising a $2 billion valuation a couple of years later, a few years later, then what is going to be the flow-on effect next? Perhaps it'll be a pendulum that will swing back, and all of a sudden we will be funding anonymous founders and anime profile picture startups, all run by autonomous agents, and we'll finally get a little bit of like grit back into the crypto space, a little bit of griminess that we can point to and say, hey, yeah, this is punk rock. This is something exciting and energetic that is outside the bounds of what the suits and regulations want the crypto space to do. So what I would like to see is more investment in TradFi type crypto products and crypto teams, because again, that might give cover to the scrappy underdogs that are fighting back against that system, and we'll see a competitive rivalry between two parts of the market that do seem at heads with one another. But because crypto is a technology, all of them can coexist, even if they're at far opposite ends of what they want out of on-chain finance. So that's my Monday morning rant about all of this stuff. All right, on to the next one. Yeah, all right. I mean, I don't want to get myself in trouble by reacting too fiercely against this, but this is from Saylor's Twitter timeline yesterday. And to give you context, I mean, perhaps you already know, but Strategy posted a pretty sizable loss last quarter, and it was so big that it forced Fong Lei, the CEO, to kind of telegraph that perhaps soon Strategy might have to start selling Bitcoin in order to fund its dividend payments to shareholders. And since then, we've had Michael Saylor kind of, I think over the weekend, he said that whatever Bitcoin they sell, they're going to buy 20 times the amount that they sell. So it's all within context of itself, and that it trying to say that, hey, Strategy selling Bitcoin might not be the worst thing in the world because they have a ton. They have enough to sell. So no worries there. But I'm just going to play this. I'm not sure if we're going to get all the way through it, but this is essentially what we are working with right now.
Let me recap the earning call. Yeah. They said, Mike, don't touch the Bitcoin stack. Now I'm buying more while they fading into black. SGRC printing, engine running clean, watching debt transform into the Bitcoin dream. Turned on the BTC drive, no shame in my face. 65 billion and I'm still winning the race. They panic when I say, sell a little coin just to prove the whole market doesn't break or get destroyed. Company fine, Bitcoin fine, world still spins. You scream Ponzi while the weak cave in. Bitcoin getting stronger every cycle, reborn while I keep building through the middle of the storm. I'd like nothing better than to rip your wings off. Every short position getting weaker when we lift off. I'd like nothing better than to rip your wings off. We use the equity ATM, yeah, we said it with pride.
Okay. I mean, for those that aren't following this on screen, we basically have a Zoom call populated with all the executives at Strategy, and it's obviously AI being led by a rapping Michael Saylor, and they're all dancing on screen, you know, and it's just odd that we see Saylor really leaning into this kind of content, considering Vitalik really pioneered this type of energy when it comes to crypto and addressing getting your story across through dance. Let's say that. And I'm not sure that I would ever put Saylor and Vitalik side by side in terms of I'm using this word a lot today, culture that they bring to crypto. But here you go. I mean, obviously it's all fun, and Saylor has done, I mean, I said it in the previous segment, I said it only 10 minutes ago, that Saylor has done an incredible amount when it comes to justifying the value proposition of Bitcoin. And we can debate how deep that really runs all day, considering the texture that he brings to Bitcoin is essentially that he's buying a bunch of it and pumping the price up, if not directly, but indirectly as well. You know, so I don't want to really stir the pot too much when it comes to Saylor stuff. But at least this is about where we are at. But I will say, I mean, the Bitcoiners, the digital capital people, have really been going on an offensive, over the past few days, because I think over the weekend on May 7th, so yeah, late last week, we had Jeff Walton, who is from Strive, another Bitcoin treasury company, sit down with CoffeeZilla to discuss MicroStrategy and strategy. And, you know, if you're not familiar with CoffeeZilla, he brands himself as the internet detective. And he does a lot of exposing crypto scams and stuff like that, which, you know, I think even the Bitcoin maxis in the audience will appreciate that someone is out there fighting the good fight when it comes to, you know, taking down Logan Paul's NFT scam or what have you. And he's very energized at taking apart frauds and everything. He focused a lot on Celsius, a lot on SBF, and in general, is also been making the case that strategy through its relentless Bitcoin buying and its like financial engineering of different types of shares and financial systems in order to continue to pay out dividends on Strategy's Bitcoin holdings in different ways, started to brand Strategy as something of a Ponzi scheme. And if you miss this chat between Jeff Walton and CoffeeZilla, it's worth checking it out. Essentially, what it comes down to is that Strategy and all other digital asset companies, that they believe that the price of Bitcoin is going to appreciate every year on average over the next decade, 2 decades. And that is essentially how they are able to tailor these products to people who are willing to take on that risk, who also believe that the price of Bitcoin is going to increase every year for the next 10, 20 years. And it is essentially a disagreement of belief in that particular fact. I would definitely catch this podcast if you can, because it is quite illuminating to see how the mind of the skeptic works when faced with true belief in something that something is going to go up and to the right ad nauseum forever, as Saylor likes to say. But it's just curious that we have this CoffeeZilla podcast dropping, Saylor dropping dance memes and rapping on X to kind of bite back to the bears who might like to poke fun at strategy for finally having to sell Bitcoin. They haven't sold any yet, but something that was curious in Saylor's rap, going back to that, is that he mentioned that they could just sell Bitcoin to prove that nothing bad would really happen to the price of Bitcoin, even if they did sell a little bit of it. And that reminds me of what Tesla did. Tesla also bought a bunch of Bitcoin and then chose to offload some of it. Elon Musk said at the time that they sold off, I think, 10% of their supply in order to test the liquidity of the Bitcoin market to prove the value of the asset that they were keeping on their balance sheet. And it's just funny to see Saylor essentially making the same case, which, hey, I suppose it could be true. But that about covers it today. It wasn't too deep in terms of different news stories today, but it's only Monday morning. It's a little bit of a slow weekend in the grand scheme of things, but we're going to catch you on Wednesday for more, and let's see what else is happening across the crypto space in the next day or two. In the meantime, please take care of yourselves, and we'll catch you next time. Goodbye.